Good morning from London. This is Bloomberg Markets Today. I'm Guy Johnson alongside Kriti Gupta and Tom Mackenzie. Anna is off today. We're an hour away from cash trading in Europe. So what do you need to know this Thursday? It is a big day in Bern. Will a strengthening Swiss franc give the SNB cause to deliver yet another rate cut? We're an hour and a half away from finding out. No such excitement, though, over at the Bank of England. With the election looming, the MPC is unlikely to act today, but will give the market a much-needed update on when the first cut could come. And we are, of course, live in Paris as the French business group Medef prepares to grill political hopefuls on their plans for the economy. Kriti.
In the meantime, a quick check on these markets here. When you're looking at the stocks picture, Euro Stoxx 50 futures higher by 0.2%. Slight outperformance right here in the UK with FTSE 100 futures higher by 0.3%. But as Guy just said, it is all about the central bank decisions. Euro Swissy seeing a little bit of weakness. Cable 127.11. Markets today starts right now.
Thursday, the 20th of June. Good morning, folks. Switzerland drew with Scotland last night. Bit of a disappointment, you could probably argue, for the Swiss team. Maybe the Swiss get a little bit of a lift today, though, from the fact that the Swiss National Bank could be about to cut rates. The reason for it seems, well, French troubles. The euro has been weakening on the back of what we've been seeing in France, and as a result of which the SNB may feel in Bern today that it feels that it needs to step in and deliver a rate cut, guys, to counter that move.
1 point for Scotland. I think they'll take that, won't they?
They will. They've got to be hungry now.
1.4% inflation in Switzerland. Let's just meditate on that for a moment. 1.4% inflation. So what is the case, I guess, for not cutting at this point? And it's interesting because there's a split, isn't there, between economists and traders.
Isn't.
Yeah, that's pretty much it.
That's pretty much
done.
It.
Show done.
Yeah.
I think there's the economics to it. It's the positioning that's catching my eye. Euro Swissy here. That positioning is bearish. Hedging is preparing for something bullish. There's a split among the economists. There's a split among the positioning. It could go either way. This is more exciting than the BOE.
Well, the BOE is going to be really dull, so the base is really low.
I know, but still.
We're trying to pick it up.
I don't go to Switzerland for excitement.
Can we blame the French for the Swiss troubles? And I think that it probably is what it's coming down to. Basically, the euro has weakened really quite significantly on the back of what we've seen in France, as a result of which they feel that impact on the currency and the disinflationary impact that it's going to have will be something they need to lean in on. The most obvious route, because jawboning and purchases don't really work anymore, is to deliver that rate cut. The problem with it is that the Fed looks like it's going to be further out in terms of its rate cuts. The ECB is actually sounding fairly hawkish right now. The Bank of England, well, who knows? We're not going to get much information today. But the narrative from the other central banks is that we're probably going to be more cautious. So can the Swiss really be out there even further on their own?
There was a surprise in March, wasn't it, when they cut with 25 basis points. Thomas Jordan is not immune, or not. We're not unused to him coming through with surprises. In terms of dropping the cap back in 2015, and then the surprise cut in March. So that's what makes this a particularly interesting moment for the SNB.
Let's figure it out. Let's go to Zurich. Let's figure out exactly what is happening here. Bloomberg Swiss economy and government reporter Bastian Benrath joins us now from Zurich. So we've kind of laid it out, Bastian. We think that probably this is a tough decision. What are you looking at in Zurich? How close a call could this really be?
Oh, a very close one, absolutely. And what I find particularly interesting is that economists and markets are very split on the decision. Markets price a higher probability of a cut, whereas economists, a slim majority, but still a majority of economists, says no, they're going to be careful, they're going to hold. So I would say, honestly, I've seen a couple of SNB decisions, and this is definitely the most unclear one which I've seen in recent years.
But what is the debate here? What is the concern? We just kind of outlined it a little bit, but why is there so much hesitation when it feels like there's the currency impact to factor in as well? It feels like, at least from the outside, a little bit of a no-brainer. What's the hesitation?
Well, the thing is that, while Swiss inflation might be very low for international standards, it is still in the upper half of the SNB's target range. So, unlike the ECB and the Fed, the SNB doesn't have a point target for inflation. So they don't aim for 2% inflation. Instead, they aim for inflation to be between 0 and 2%. So, they have this little target range. And if you see, it's above 1%. So it's in the upper half of that target range. And it also didn't show any signs signs of softening in the last 2 readings. So it's just an economy which is used to very low inflation. So if you have inflation somewhat persistently at 1.4%, that is here seen as an argument to hold rates and not to cut further.
OK, Bloomberg's Swiss economy and government reporter Bastian Benrath with a fantastic setup, of course, as we lead up to that decision from the SNB. The Swissy versus the euro at 105, just up a little over 0.1%. We're going to be speaking with the SNB President Thomas Jordan after the rate decision. Stay with us for that interview, of course, as well. But it is also BOE Day. Guy's not excited. I know Lizzie Borden will be. I got a sense that maybe Kriti is on the outlines of a little bit of excitement when it comes to the BOE. Yes, the politics makes it difficult. But we're going to get the statement. Lizzie, outside the BOE, what are you going to be excited about, Lizzie?
Well, Tom, I hate to say it, but I might as well go home. They are right. It's expected to be a non-event here at the Bank of England today because of the election. We're not getting a forecast. We're not getting a press conference today. We will have the guidance, as you say, but that's already dropped the tightening bias. And, of course, we also had the inflation data yesterday back at the Bank of England's 2% target. So it suggests that the cuts are coming. The question is when, and for that we look to the services inflation reading, which was actually unexpectedly hot. So in terms of the market reaction today, we've already had a movement. You had a tick up in gilt yields, you had a tick up in the pound off the back of the services number. That's happened already. I would look, if we're really looking for some excitement, to the vote split. If there's any change, perhaps it suggests that August will be a live meeting. But we've already factored in that this is the last meeting for Deputy Governor Bren Broadbent. He's going to be replaced by Claire Lombardelli. What could be interesting next time is that she could switch the dynamics on the committee to potentially be a little more hawkish.
Lizzie, don't go home just yet. You never know. We may see some excitement a little bit later on. That vote split could deliver something. You never know. Lizzie Borden is going to be outside the Bank of England all morning. We'll make sure that that happens. On Monday, we've got more coverage of what is happening with the political story around the UK. Business Secretary Kemi Badenoch and the Shadow Business Secretary Jonathan Reynolds will be going head-to-head, a live televised debate moderated by Bloomberg's Francine Lacroix. They'll also face questions from Britain's leading business groups. Catch that business debate 12:30 p.m. UK time, Monday, on Bloomberg Television. You'll be able to, of course, find it on the Bloomberg Terminal, the Bloomberg website, YouTube, and Bloomberg Radio. We're going to have that very much covered. Let's get back to the central bank story. I think you do me a slight disservice when I say that I'm not excited about the Bank of England. I feel that I've been...
Is that exactly what you said, Guy Johnson?
It may be. But I can change my views. Having listened to Lizzie Burden's excellent coverage, the reason I think it is interesting is that we just haven't heard from the Bank of England.
Yeah.
Because of the election, there's been nothing happening. We haven't heard the usual commentary. Now, I would always argue that we get too much commentary from the Bank of England, and that causes too much turbulence in the swaps market, which causes too much turbulence in the economy, particularly in the housing market. But nevertheless, there has been an eerie silence around the Bank of England, which today might be corrected just a little bit. We may get some guidance, some idea at least, of how the Bank of England and the MPC are digesting the latest data. So something is there. Lizzie Burden's not going away just yet.
No, we're not going to let her go. It's all about the markets for me, as always. I want to bring it back to the FX trade. In the last month or so, the outperformer has been the pound, which is strange, given the move that we've seen in gilt, the conversations around lack of fiscal headroom, no real massive change in policy expected from market participants. And yet, with the weakness in the euro, potential positioning in the dollar, now seeing some strangeness in the Swiss franc as well, cable is the outperformer, and I feel like that's the part that could get switched around after the BOE meeting today.
As in, you think the pound comes under pressure? Because if we get expectations pushed, if we get August faded out, if they don't put any language in the statement that just that, and it becomes September or possibly November, we've seen yields moving up on gilts. We saw that yesterday. You've got relative political stability here in the UK.
Yeah.
We've got an election, of course, but the polls would suggest that there's going to be relative to our cousins in the Eurozone. Yep. Maybe there's a harbour of political stability here after July the 4th. Does that not support the pound?
I don't know if political stability is the right word. I think it's a wait and see. It's kind of on ice for the next, 2 weeks, 2.5 weeks or so. And for that reason.
Okay, so where does the surprise come from? I think is the question that we're asking ourselves when it comes to the UK.
Can I be very annoying on this program? It may not be a fundamental thing at all. it may not even be a reason to actively move or play the BOE, et cetera. It might just be a function of everything else that's going on in the world. What happens with the Swiss franc? That might actually impact the pound more than the BOE does today.
I think you're probably right. But just coming back to the politics, I think the real question is whether or not Rachel Reeves, Keir Starmer stick to their guarantees. I think that's the question that I think a lot of people are asking themselves. They're saying they're not going to significantly alter the economic trajectory that the British economy is on right now. But do they stick to that under pressure from the left, I think is a big question that I think a lot of people will be asking. I also think that if they get a big majority, do we see a movement towards Europe? There are many pro-Europeans within the Labour Party. That could change the fortunes of the pound quite significantly. So I think politics is in some ways, in terms of the outcome, feels like a non-event, but the policy that flows from that, I still think is up for grabs.
Well, it's still a very long-term prospect, right? Like you can try to make that bet now, and you won't actually know if you're right until for another 12 months, perhaps, or even earlier, first 100 days, whatever that may be. It feels like the conversation is still going back to France, and we got news overnight from the business lobby there as well, really potentially pushing what is going to look what the French policy agenda is going to look like.
There's a great piece on the Bloomberg terminal today talking about the fact that the French business elite is very silent on what is happening in terms of the
Until
outcome.
now.
Well, maybe until now. Maybe we get some grilling of the political leaders today by the French business lobby. The head of the Medef has been the only person, I think, largely from that kind of elite group of CEOs that's come out and talked about the idea that there's potential consternation being caused long-term, potential problems for the long term for the French economy as a result of what is going on here. But everybody else remarkably silent. So does today's Medef event change that?
Yeah.
Do we see maybe business making its voice heard? Why is business so cautious in France in speaking about what is happening
Well, it's
here?
eerily similar to what we saw in the run-up to Brexit. But would you want to be putting your hat in the ring with a party Renaissance that's polling at, 20% or so? That's where the people are. So as a business leader, do you risk isolating yourself from potential customers and clients if the majority of people in France are either turning left or right and certainly away from Renaissance?
But you can still flag your concerns about the economy. You can. Are they being informed? I think a lot of people would argue during the Brexit process that there was a lack of real information as to the true economic business consequences of what Brexit would deliver. Is France in danger of falling into that same hole where you don't get that clear guidance as to what the economic impact would actually be? It's all well and good to talk about kind of spending money, but there are consequences. France doesn't exist as an island. The UK did, but even the UK doesn't exist as an island, and as a result of which there are consequences. And maybe that's where Medef needs to step in today.
On top of that, I don't think we've mentioned it yet, there's a bond auction today happening in France.
Multiple, it's multiple auctions.
First test since Macron's done it at some massive yields. I'm curious if just this kind of yield jump that you've seen creates the stage, or sets the stage, I should say, for a massive bid into the French bond market, simply as a function of that carry ahead of the South African elections. I know it's not fair to compare France and South Africa, but ahead of the South African elections, yields were spiking. And it ended up being their record bond auction for their tenure. And I thought that was really interesting.
So I've been talking to a number of people over the last couple of days about where they think ultimately the spread could go. We're at kind of high 70s in terms of the OAT Bund spread right now. We've been to 80. There's a few kind of hiccups around that. But some people are suggesting that we could go to 120. Yeah. There could be significant widening still here to come, to your point, maybe leaning the other way. Yeah. But actually the market is still fearful because of the lack of information on what exactly the business programs, the economic programs.
Blue Bay's not buying, Candarin's not buying, at least for yet.
Well, we'll see what that demand actually looks like. So that's going to be one thing that we're watching today. A couple of others as well. We talked a lot about the SNB. That, of course, happening at 8:30 a.m. for the decision. We'll have full coverage right here. But at 9 a.m. comes the presser, as does the Norges Bank decision as well at the same time. We haven't actually given a fair shout to the Norwegians, but don't worry, we'll do plenty of that as well in terms of this kind of central bank palooza and everyone kind of doing their own thing. We'll dive into it. We also have the ECB publishing their economic bulletin at 9 a.m. So lots of headlines happening at that hour. At 12 p.m., of course, it is the BOE, Lizzie Burden, on location. We'll be covering all the developments there for us, that live coverage as well right here. Plus plenty of data. 1:30 p.m., we've got initial jobless claims in the States, the labor market, housing starts is still very much in conversation there. And 3 p.m. UK time, Euro area consumer confidence.
That could be an interesting number.
There's a lot going on this morning. You should just watch Bloomberg Television all day long.
I'm assuming everybody does already.
Yeah.
Coming up, we're just over an hour away from the SNB. We're going to break that decision for you. We're going to look ahead to the interview with Thomas Jordan. That's going to be later on the day. Plus, we're live from Paris, the main business lobby, getting ready to interrogate political hopefuls ahead of the coming election. That you definitely want to tune into. Kriti's concerned that we haven't given this enough enough coverage today. Norway. We're going to do it from a different angle this morning, though. Norway is ramping up its defence spending. Later in the show, we're going to hear from the country's defence secretary. We're going to speak to the CEO of Kongsberg as well at a new missile factory in Norway. We're going to think about defence spending in Norway. We're going to think about the Sovereign Wealth Fund, what role it can play in that process as well. Any questions? Join us. Join the debate this morning. IB Plus, BBTV Go is the function on your Bloomberg terminal. That's the factory. That's what it looks like. We'll be live there in a moment. This is Bloomberg.
Welcome back to Markets Day. We're about 40 minutes or so away from the cash equities open in Europe. When you look at futures, generally positive, but not by a massive margin, higher by 0.3% on the Euro Stoxx 50. It is all about the central banks. FX is going to be very much in focus. We got the SNB, Nordsbank, BOE, and up until then, it feels like it's really going to be a positioning story. We'll see, though, if the inflation narrative and perhaps even the geopolitics changes some of what we hear out of the central banks. Guy.
Let's talk about that geopolitical story and how it's affecting the European defence industry. We've also got the ongoing war in Ukraine, as a result of which we are seeing a significant effort in many parts of the continent to ramp up defence spending. Therefore, today we focus on the opening of a new missile factory by the Norwegian defence company, Kongsberg. It's a concrete example of actually the fact that Europe is building up its defence capability. But this was a programme that started quite some time ago and speaks to the long lead times that this industry faces. Let's go to Norway now. Let's go to Ollie Krug for more on this subject.
That's right, Guy. As you say, the longest day in Norway is a big day here for Kongsberg. As you can see, we're in the facility, the assembly line for this missile factory, making the Naval Strike and Joint Missile Strike Factory that opens today. And we're very pleased to be joined by the CEO of Kongsberg, Geir Høy, who joins us now to discuss kind of how we got to this place and how did the war, really the war in Ukraine and Russia, because this was an idea you came up for before the war. How did the war itself kind of accelerate the process here?
Yeah, as you said, this was started back in, and the final investment case started back in 2021. And the reason was that we saw a huge demand increase in the NSM and the JSM demand. So obviously the innovation by Russia in Ukraine, what we have seen is that, I would say the speed of demand is going up, and we see more and more countries asking for these type of capabilities.
And is the demand large enough to justify more investments like this? Because we've heard a lot of complaints from some defense contractors that there's a lot of talk about the orders, but they're not there. Are you receiving the orders you need to do more of this?
We receive definitely the orders. That's the reason why we have built this factory. I think we are well off as it is today. Obviously, we will going to consider also other facilities, other places like Australia, US, as we go along and see the demand coming.
And where are you seeing that demand coming from geographically? What militaries are you experiencing the greatest demand from at the moment?
Today, we have delivered our NSM missiles to 13 countries, including Norway. And basically, it's NATO and the allies that are requesting these type of capabilities. So I think, obviously US, we got the over-the-horizon contract with the US back in US Navy in 2018. And we also now see the F-35 coming online. And then also the JSM is a capability that more and more countries would like to.
And when you think about your manufacturing footprint, because you have, I understand that you're going to open a facility in Australia later this year. You also have already some operations in Pennsylvania. With rising sort of protectionism, is that something you think about in terms of where you actually produce this material and for the specific economies?
Yeah, obviously there is some restriction of certain parts of our type of products. But basically, we can, as I say, Australia, we're going to open up a partly assembly line where you can do part of the missile, and then there is something that we have to do here in Norway. But definitely we can increase our partly assembly other places like Australia, probably US.
And then attracting investment, it's been a bit sort of a taboo historically to kind of invest in defense. That has changed. Are you attracting new kinds of investors?
I would say that after the Russian aggressive war in Ukraine, we see that there has been a wake-up call, I would say, in Europe, in the world, that we need the defense. We need to increase our capabilities, defending our sovereignty. And I would say that the investors are eager to talk with us, but obviously there are also investors that don't invest in defense.
And one of the biggest investors in the world is the Norwegian Sovereign Wealth Fund. They, for example, will not invest in certain companies, not Kongsberg, but ones that are invested in sort of nuclear capabilities. Do you think that there needs to be an amendment to some of the funds and sort of changing that? Will that change the perception and attract more investment to this industry?
The Norwegian fund is not allowed to invest in Norway, it's only outside.
But in terms of a signal?
Yeah. I think you see a shift from certain funds, actually. As I mentioned, there has been, I would say, before the war, there was special funds that's saying that, okay, we go into the more sustainable green part, and then went out of defense. We see some of them coming back now into the defense side.
And then in terms of sort of the things that are going to prevent you from scaling up, where are the bottlenecks right now? We know there's a lot of concerns about maybe not having the right labor. Where are the what would be the thing that would block you from doing that?
No, I think when we made this investment case, I think one concern was not basically to build a factory, it was actually the supply chain. I mean, it's a lot of suppliers into this factory. So we also had to work very thoroughly with all our suppliers so that we make sure that they are building up the capacity as well. Obviously, this factory is really automated. It is the most modern factory that you can do when you talk about missiles. So we also can scale at a bit better rate than we did before, but not necessarily increasing extremely on the human capital.
And if you need to scale, are there other parts? Obviously, this is the missiles. You make a lot of different kinds of hardware. Are you seeing demand increasing for other kinds of hardware as well?
Absolutely. I mean, the place we are now, we started here back in 2007. We was 200 people. We had 20,000 square meters. Today we are 1,200 people here. We have 90,000 square meters. So both on the air defense, on the space part of Kongsberg, and also the missile production.
Well, Geir Høyer, thank you so much. The CEO of Kongsberg, just talking here in this facility opening today, where they're going to be producing these missiles that go into, yes, the F-35 jets in the United States, but also sort of these kind of very mobile missiles that go back on the back of trucks and strike sort of naval targets all around the world.
All right, Oliver Cook there from the floor of the missile factory. We thank you so much for that interview. It's really interesting what they were saying there about the ramp up in defense spending. To me, the supply chain issues that really caught my ear, because it's something we've been talking about, not only the political will and the money behind it, but also where do you get these raw materials from? What does that mean then for the commodity picture that you need to have this ramp up?
There are just enormous lead times involved in this industry.
Yeah.
That factory was started before the Ukraine war even began. Just shows you that if we want to build up the armaments around Europe, that we're going to have to work pretty hard to do it. The other thing is that I think 80% of defense spending in Europe goes to the United States, which I think is something that Europe maybe needs to think about how it corrected it. I also think he's right. The Sovereign Wealth Fund in Norway is not allowed to invest in Norway. Maybe that needs to change. Maybe we need to think about how Norway invests in its own defence, and maybe the Sovereign Wealth Fund should be involved in that process.
OK, coming up, with the UK heading to the polls, the BOE is widely expected to hold rates later today. Of course, we're going to look at the path forward, though, for the economy and what to scrutinise in the statement. That is next. This is Bloomberg.
Welcome back to Markets Today. We're about 30 minutes away from the start of cash equities trade. You're seeing futures a little bit higher, but I think the story today is all about central bank palooza. We talked about the SNB, talked a little bit about Norges, but it's the BOE as well, especially in the context of the politics as well. Let's go straight to that story. The Bank of England expected to keep rates steady later today with the impending UK election, making a move potentially a little bit more difficult. The latest reading of services inflation coming in higher than expected, even as CPI fell to 2% in the month of May on an annual basis. Joining us now, Liz Martins, HSBC UK economist, joins the program. Liz, a pleasure to have you on the program. It feels like Switzerland's getting all the love this morning, at least from our point of view. But tell us why we should be paying attention to the meeting today, especially in the context of the fact that we haven't really heard much out of the BOE lately.
No, we haven't. The BOE is in a quiet period, not only because it's running up to this decision, but also ahead of the election. So the last we heard from it, it was talking about summer rate cuts. It was talking about being much more comfortable with the trajectory that inflation was on. It was certainly giving out the impression that it wanted to join that club. We talked about Switzerland, but also Sweden, Canada, the European Central Bank. They've all taken tentative steps down this path of easing. And I think the BOE really wants to join that club. The problem it has, like you said, is services inflation keeps coming out too high. So today is important because it really is the only opportunity the BOE has to send us a message. Has the market got it wrong in pricing out too much easing this year? Is it still thinking about a summer rate cut? Or actually have these two kind of inflation overshoots that we've seen since we last heard from it, have they been enough to change the way it's thinking? Until the election, today's statement, today's minutes are really the only way the bank can communicate with the public. So, and of course through the vote as well. So we'll see what message we receive from it.
What's the game changer here? I'm so curious. I can appreciate that the UK election, of course, is going to be looming large over all of this, but does it really matter for the BOE, given that there isn't that much money to do anything with anyway?
Yeah, no, I think the BOE is obviously focused on its own inflation target, isn't it? I think it won't want to be seen to be doing anything that has any political motivation whatsoever. So I suppose that for its purposes, suggests a quiet meeting today, not leaning too hard one way or another. But of course, its most important focus is the inflation. And, since we last heard from it, we've had two inflation numbers, and both of them, services have been, higher than what it was expecting. And not just higher than what it was expecting, but actually accelerating. If we strip out the base effects and we look at kind of the three-month annualized rate of services inflation, it's actually starting to go back up again. So that really will be a worry for the BOE.
So, Liz, on that point, as you push forward, what is your expectation as to how the services component evolves then in the months ahead for the UK?
Well, it's tough because obviously wage growth is still really high, right? The last wage growth number was in line broadly with the BOE's expectations, but 6% is still really high. So unless you are becoming much more productive as a business, that's just a cost, and it's a cost that you will try to pass on. And given that the economy is recovering, demand for services still seems relatively robust. The risk is they will be able to pass that on, and services inflation will stay above average. Having said that, I think we certainly think we're coming to the limits of pass-through. I think that there are signs of consumers, demand falling on the back of the price level having risen so far. And that being the case, I think costs can go up and firms may have to take a little bit more at the margin. And that's certainly the Bank of England's view as well. So our view is, yes, it remains a bit above average for the remainder of this year, but to a lesser degree, I guess, than it has been doing to now.
If we get fewer cuts this year from the BOE, 1, 2, possibly 1, do they come through with more in 2025? Again, are they going to have to load up more cuts in 2025 as the economics, the data starts to adjust?
I don't know about have to. It's why are you cutting interest rates, right? It's this debate as well about Table Mountain versus the Matterhorn, right? If you're in Table Mountain world, you're high for a long time and you're coming down very, very gradually as conditions allow. If you are in Matterhorn world, like the pandemic or the global financial crisis, you're cutting rates very, very quickly and bringing it down very quickly. You do that generally, if inflation is on target to be, on track to be way below target, maybe you've got a recession or, a financial crisis or something like that. So I don't think we're going to be in that world. I think the BOE is probably still going to be adjusting very gradually, unless something intervenes like one of those sort of crisis scenarios. But I think we're going to be in a world where, look, inflation will come down. It will allow interest rates to be cut gradually, but it won't be a case of, we have to do more in 2025, unless you get one of those kind of crisis scenarios. Because, if unemployment is still low and wage growth is still elevated, then inflation is only coming down. It's not kind of collapsing or going below target.
Liz, if the Fed doesn't cut this year, will the Bank of England cut this year?
Well, the Bank of England was asked that question, I think, at the press conference in May, and Andrew Bailey said, look, it's got, we only take the Fed into account insofar as it affects UK inflation. And how might it affect UK inflation? Well, if it caused the currency to really fall, if the UK was cutting and the Fed wasn't. But, the UK currency, the pound, is pretty strong at the moment. I think it would need to be a really big fall, and it would need to be against not just the dollar, but a number of currencies. We're not seeing kind of any evidence of that. So I do think we've seen, I mentioned a few central banks have already cut, ahead of the Fed. It didn't stop them. Yep. I don't see why it would stop the BOE if it needed to.
Well, OK, you say that. The ECB has cut and now feels like almost it's admitting it's made a mistake. It feels like it's saying that it won't cut again soon, and it's trying to maybe qualify what it delivered thus far. Is there a lesson from Frankfurt, then, in what the ECB and what the Bank of England does next?
Yeah, I mean, I'm not sure they would put it as a mistake. I think what they would say is, look, we've removed the insurance hike that we did. So they did one final hike, which they referred to as kind of insurance. They then took that out. And I think for the BOE too, moving from 5.25 to 5%, it's not a huge deal. It's not really going to fan the flames of inflation too much relative to where we already are. The question is, as you say, how much more are you going to do thereafter? So I do think there's a lesson from Frankfurt in the sense that every move will be data dependent. And, it's not a guarantee that we do one, we're then going to do another one every meeting or even every quarter. The central banks will be looking at the data. And at the moment, as you say, for the ECB and for the BOE, the data is still a little bit too inflationary to be comfortable to sort of commit to a path of easing.
There you go. Not a complete non-event today. There are things to talk about. There are things to debate and ruminate on. Liz, great stuff. Thank you very much indeed. Liz Martins, HSBC's UK economist. Thank you very much indeed. Let's pivot to something else we need to talk about when it comes to England. And that's, of course, the football team. Playing tonight, Denmark. Nervy start at the beginning of the Euros. We've already seen Switzerland drawing with Scotland overnight. Maybe there's some sort of indicator there in what the SNB is going to do in Bern today. I joke, of course. But this is my way of also talking about what is happening with the EPL, the English Premier League, and what is happening there. One loud voice in that debate as to what happens next in English football is, of course, Manchester United's new co-owner, Jim Ratcliffe. He says the people running the EPL, the English Premier League, are in danger of ruining the world's richest football competition. He spoke exclusively with Bloomberg's Francine Lacroix.
I just think the Premiership needs to be careful it doesn't get itself into an endless legal wrangle with, lots and lots of clubs, because at the end of the day, the Premiership is probably the most successful sporting league in the world, certainly the most successful football league in the world. And we have this expression up north in England, if it ain't broke, don't fix it. And, you have to be careful if you start interfering too much, bringing too much regulation in. And then you finish up with the Manchester City issue, you finish up with the Everton issue, you finish up with the Nottingham Forest issue, and on and on and on. And if you're not careful, the Premiership is going to finish up spending more time in court than it is thinking about what's good for the league. And, we've got the best league in the world. Don't ruin that league, for heaven's sake. And then there was all this conversation about anchoring, and, what would anchoring do? Anchoring that would inhibit the top clubs in the Premiership. And the last thing you want in the Premiership is for the top clubs in the Premiership not to be able to compete with the Real Madrids, Barcelona, Bayern Munich, PSGs. I mean, that's absurd. And if it does, then it ceases to be the finest league in the world. So people have to be... And then we've got the government regulator. We're now talking about a government regulator coming in. And you know, if you've got a government regulator, at the end of the day, they'll interfere. And that won't be good. So, I mean, I have a few concerns about the Premiership in that, you know, when Richard Scudamore ran it, it was, you know, it was a really fine league. It was very successful. And over that, I don't know how old the Premiership is now, 15 years, it became extremely successful. And then everybody starts interfering and messing about. And that's, my view, is not good.
So do you worry about the people in charge? Is it a personality concern about?
No. It's not about. I don't know how they drift. I mean, I've only been in football for 6 months. So
well, you've been following it for a long time.
yeah, no, that's true. No. I mean, I know Alison. She's a very sensible lady and what have you. But no, I think that drift into complexity that's unnecessary. I think people just need to stand back and think about whether that's good. I mean, they should remember what the Premiership's about. It's the best league in the world.
Ineos founder, Manchester United investor, Land Rover lover, Jim Ratcliffe, speaking exclusively with Bloomberg's Francine Lacroix about what is happening with the game of football here in this country. Kriti's going to downplay the Denmark game today.
You're hanging me out to dry on international television. Well, look, the Londoners may hate me, but the Europeans will love me. I think the big match of the game is Spain versus Italy. I'm pro-Spain, obviously, but it will be a really good game. And I think that's the highlight of today. It can't be England, Denmark.
I mean, it's obviously not the highlight, but it's hard to argue that it's going to be a good game, Spain, Italy. What's your prediction though for England,
Denmark?
Yeah.
I guess I have to pick England because I'm a resident. They'll kick me out if I don't say that.
Your prediction, the scoreline.
I don't know the teams well enough to comment.
Okay, guys going 3-1 for England, right?
I was going to go 1-0 to England.
1-0, okay.
Yeah, I think the nerves continue, to be honest. And I think I'm slightly concerned about what England do at the back. But
what is your game day ritual?
I don't really have one. Rugby's a different matter. Other sports are a different matter. Football, my children will definitely have it on later. It's a slightly earlier game today, I think.
5 p.m, I think.
So we have the ability to watch it before we have to go to our
He's going to have a massive bowl of chips. He's getting out the six-pack.
I was going to say, I'm picturing Guy like kind of with an apron, with a grill, with next to the pub. I think I'm mixing
You're
two.
You're not really allowed to take your barbecue to the pub in this country.
I know. I'm learning that as I speak. But
no, it sounds like a great idea.
You should try it.
I will.
See what happens.
I will.
Coming up, we're going to get more grilling tips from Guy Johnson this summer. Also, stocks to watch, including packaging DS Smith. Packaging company, I think, DS Smith. It's more interesting than it sounds. The UK packaging firm missing full-year revenue estimates in its earnings this morning. If anyone can enliven the packaging space, it's Joe Easton. We're on that next. This is Bloomberg.
Thursday, the 20th of June. Welcome back. You're watching the show as we count you down towards the European equity market open, 13 minutes away from the start of play here in Europe. Joining us now to discuss what's been happening overnight, Paul Dobson, our executive editor for Asia markets. Actually, let's start with Asia, Tom. Paul. Get the names right. We need to figure out, Tom's usually talking about China, but I'm going to ask you a China question. Honestly, what is going on in Chinese markets? We've had this huge reversal. There is this belief now that unless the Chinese authorities step up and deliver stimulus, this reversal is going to continue. What is going on?
Yeah, well, I think that the long-term outlook is for slower growth and weaker inflation as well, Guy, and that's what the market's pricing in, particularly in the bond market where you see, record highs in bond futures, record low yields. Right across this curve, you're seeing a compression across the duration, a compression in credit risk as well. People are piling into bonds, and that's because their view is that the growth outlook isn't that good and the alternative assets aren't that good either. What it's doing is it's allowing more issuance to come through for the likes of, today we had a story about how a state-run company is even considering a 50-year corporate bond, which would be the first for the nation. So that's the sort of outlook on that side. But of course, it puts downward pressure on the exchange rate. We've seen the yuan weakening to the lowest level against the dollar this year. And so, you know, it's that sort of outlook that there isn't going to be a great deal of stimulus coming through, and so the pressure will remain on the monetary side, keeping interest rates down, keeping the currency under pressure. That's what we're seeing in the markets there today.
The Americans are going to be back today after their holiday yesterday. The key question that everybody's asking right now is, have yields peaked? The market's now pricing in 2 cuts this year from the Fed, and everybody's trying to work out whether or not the steepener trade that everybody wants to work is finally going to kick in, Paul.
Yeah. So a little bit the opposite of what's going on in China, where those rates are always pressing lower. You know, at last, some relief we're seeing in the Treasury market, where yields are starting to come off this year's highs, where the US Treasury market is actually close to breaking even again for the year, having been down more than 3% earlier on. Remember, you've got those higher yields, which are incrementally feeding into the returns for the year all the time. So now it's a question of, have yields peaked? We're going to get key inflation numbers this week, which should give another little sign of softness there, and that may encourage people in the bond market to continue to look for lower yields through the rest of the year, plugged in, of course, to what those Fed expectations are going to look like.
All right, Paul Dobson, don't go anywhere, because we've talked a little about the Asia story, a little bit about the States as well. Let's bring it right back here to Europe. There's a chart that caught my eye as we're kind of drum beating towards the SNB decision coming in. I want to say about 40 minutes, if I'm doing my math right as well. The positioning story is important here, because even though you are seeing economists and markets kind of split, you are seeing a little bit of strength in the Swiss franc this morning. But, however, look at the positioning that's been built up against the SNB here. Here's what you're looking at: non-commercial positioning, and you can really see that red line tells you the story. A lot of positioning for weakness in the Swiss franc, despite the fact that they may not even be cutting this time around, and of course had that surprise cut last time front-running the ECB. Paul, I want to get your take on the FX story, specifically when it comes to the Swiss franc here against, or versus, I should say, the euro and the pound, especially given it's such a big funding currency. What's going on with the Swiss franc?
Yeah, well, it's an interesting one, isn't it, Kriti? I think the franc has been on a bit of an appreciation trend of late, perhaps because of that huge positioning, as you're pointing to there, people getting a little bit ahead of themselves maybe in terms of what their expectations are for the future interest rate path in Switzerland, and whether they take a breather, having been one of the first actors to do that cut in interest rates. I think, as well as that, you know, the other thing that this talks to is the overall outlook for the bond market. We were talking about treasuries just now, talking about how maybe yields have peaked for the year there, because it's not just about US monetary policy after all. It's about global central banks all sort of starting to reduce their interest rates ever so slowly, maybe, and gradually, but the trend is downward for the rest of the year. And so, you know, people will be watching the SNB for that kind of read across and what they do and how they act, as well as for the implications for their FX market.
OK, as we look at the 2-year, currently yields up just shy of 2 basis points at 4.73, but to your point, well below that 5% level that we got a couple of months ago. Paul Dobson, our executive editor for Asia Markets. Thank you very much indeed. Let's switch focus, bring in Joe Easton from our stocks team for the equities to watch this Thursday. Joe.
Morning, Tom. So I'm looking at CMC Markets today. The online trading company reporting a jump in profit of around 50%, saying they're seeing strength in both retail trading and institutional investors as well, as we've got on the screen here. Also looking to do a bit of a cost-cutting program as well to drive up their margins further. The reason I'm looking at this stock, though, is because it is the best performing stock on the entire UK FTSE 350 index this year, as we can see from the screen here, up 167%, beating a couple of the food packaging giants that have done well, and also Hochschild Mining, which has benefited from the rising gold price. It really has been a strong performer. But if we look back over 5 years, put it into the context of the pandemic, when online trading really boomed during the meme stock era, it is trading well below that level. So potentially some analysts might actually see a bit of upside in that one, and we're waiting for some reaction on those shares this morning. I'm also staying in the UK financial space to look at banks, because we have, of course, got the BOE rate decision. We do expect it to be too early to see a cut for the moment, but keep an eye on these stocks over the 1 year, doing pretty well across the most domestic firms, NatWest, Lloyds, also Barclays and HSBC, a bit more internationally exposed, but benefiting as the economy seen improving, interest rates coming down, actually more of a positive for the sector now, even as it reduces net interest income. So that is a key area to watch. Again, if we look on the 5-year on this one, we're only actually trading very slightly above where we were pre-pandemic, and valuations are actually low. If you look at the price earnings, the price to book, those kind of things, potentially some value in those stocks. Finally, over in paper and packaging, DS Smith, this one actually looking a little bit weak to me. They're reporting a decline in revenue of 17% today. Pre-tax profit down 20%. The consumer outlook is weak. So this is packaged goods and also potentially the Amazon box effect, that easing as well for that company. Of course, this is actually still a takeover issue, though. International Paper has agreed to buy the company, but the stock trades about 20% below the agreed price, potentially suggesting that there is risk to this deal going through. DS Smith today reiterating they are working hard to get the deal over the line. Keep an eye on that one as well in London.
All right, Joe Easton there with our stocks to watch. We certainly will keep an eye on it. He'll be back, of course, after the market open. There's plenty going on in the equity space. Joe's got that cover. Let's bring it right back to central bank Palooza, if we can.
Palooza.
I think that's third time. Is that a third time on Palooza?
Third or fourth, definitely.
Where is it not? We need to put that on a lower third.
The Palooza. There's a whole debate between whether it's a Palooza or a Bonanza, central bank Bonanza. I like
that we've shifted it up. You've mixed it up a bit. You normally go with the Bonanza. You've gone with Palooza.
I tend to go against the current, against the crowd. I like to stand out, Tom, clearly. Let's talk about the FX trade, though, because the market is also standing out here. The Swiss franc is seeing the massive strength that Paul Dobson was just talking about as well, which for a country that's dealing with incredibly high in inflation for its own standards and for a lack of economic growth as well, there seems to be a real hesitance in terms of this cutting story.
Well, it's up 5%, in the last, since the middle of May?
Yeah.
But still down 2% versus the euro year to date. So, yes, the inflationary factor is going to be consequential. There's a really great piece on the MLive about decoding the language of Thomas Jordan, because in German, the statement in German, then they translate it into English and talk about the nuances of the German language and how that can sometimes wrong foot investors looking at this.
It's so amazing because basically so many investors will now screen and run this through an AI program to try and figure out the language. We do that here as well. So we'll certainly be figuring out what happens there. The language is important. Maybe there's some clues in it. The market's about to open. Back in a moment. This is Bloomberg. Thursday, the 20th of June, you're watching markets today. We're about to open European equity markets. Yesterday was a complete non-event for markets. The US was out because of the Juneteenth holiday. Volume was abysmally low, therefore, here in Europe. Equity markets broadly kind of folded as the session went on. We kind of rolled over towards the back end of the session yesterday. This morning, I think it's a cautious start to the day. I think we're going to see a little bit of a pop, but it's hard really to get a handle on what is happening here. The political story seems to have faded a little bit in terms of its impact. There doesn't seem to be many single stock stories that are going to move things around a bit. Feels like a holding action maybe at the get-go of trade.
Central bank day, of course, but the bond auction in France, which Kriti highlighted rightly, is in focus as well, to see what the market demand will be. What, 10.5 billion euros?
It's a bonanza. It's a bonanza,
a palooza of French sovereign debt. So to what extent that gets absorbed? We know that the spread is, 78 basis points versus the German bunds?
If you guys start saying palooza, I have to find another word. This isn't.
There you go. Job done.
This is how to get rid of it. No, it's 100% true, and I wonder how much of that affects the euro, though. I'm bringing it back to the FX story because it feels like so much of the strength you're seeing in the pound, the strength you're seeing even in equities, arguably, but the strength you're seeing even in the Swissy is a function of the euro weakness as opposed to the fundamentals on various places. That creates dislocations in this market, and the bond market. If you start to see this massive bid into the French bond market, hypothetically, that's going to have a read-through into the euro.
What you did see was Tech Week yesterday on a warning from one of the constituents. That was a factor that I wonder whether will roll out of the market today, whether we see tech bouncing back. ASML did deliver some significant weakness into the market yesterday. That was really my only takeaway from yesterday's session. So I wonder whether that reverses a little bit today. It'll be interesting to see whether that comes through as we continue to see NVIDIA marching ever higher.
Nasdaq futures pointing higher by 0.6%. The open is 2 seconds away. Futures pointing higher by 0.2%. Let's see how it reflects in early pricing then. As we get the first print coming through, the UK, the FTSE 100, just adding 2 points so far in the opening seconds, 8,206. Not a lot going on in the commodities space around basic resources that may play into the UK space. Brent up 0.2%. Gold's interesting, up 0.6. Back to the equity markets, though. You're getting an opening print up 0.1% for the FTSE 100. The DAX over in Germany up 45 points so far.
But tech leading. I mean, to your point about some of the big moves. I mean, ASML at the top of the bucket here, SAP as well in terms of index contribution. We should mention, though, that the U.S. was closed yesterday as well. So there is a little bit of a catch-up trade from even two days ago. There isn't a precedent really being set here in terms of what's leading. To me, it looks defensive right off the bat.
To a certain extent, it depends how you define tech, isn't it? So this is the kind of the big question that I'm wrestling with at the moment is, what is tech? What is NVIDIA? Why are you buying tech? Why are you buying NVIDIA? Well, no, because are you buying it because you're hiding from the coming storm? Are you buying it because you believe in AI? Are you buying it because you don't want to buy anything else globally, and therefore you buy NVIDIA? The NVIDIA chart is just eye-watering. But ASML continues to move higher, as you say, so tech is having a better day today. Defensive, maybe. Danone is a little softer today. I need to check. I don't think I didn't see Danone on my list of stocks when it came to dividends, so that seems to be...
There's an interesting UK story as well around NatWest and Sainsbury's. So Sainsbury's banking operations being sold to NatWest. NatWest not really moving on the back of that, but Sainsbury's is one of the top gainers, up 2.2% the grosser there as it unwinds that part of the business. So we continue to keep across that. ASM International is one of the top gainers, also based in the Netherlands, of course, also within the semiconductor space, up 3%. And then on downside, some of the travel and leisure, like EasyJet and Ryanair, down between 1 to 2%.
Can I come back to Danone? Because yogurt is important, and if we're talking about France, it is a strategic asset, as we've learnt in the past. So Danone is a little softer this morning, but also some of the rest of the sector is as well. Nestle is down. So Danone, there's been a 2025 to 2028 strategy update this morning, and the market may be a little bit more cautious after we've seen that update, which is why maybe we're seeing yogurt underperforming today, which is an important thing to note.
I'm still wrapping my head around you calling it Danone. In the States, we call it Danone.
Danone?
Danone.
Not Danone?
No. It's also branded, spelled differently. Anyways, this is a longer story. I should mention, though, that you have some of the other French stocks underperforming as well. So I'm curious how much of that is going to show up. I also want to point out that UBS is one of your biggest index weights on the stock 600. How much of that changes as well? Despite that it's a very global bank as well, how much of that is going to have some sort of reaction off of the SNB decision as well?
We're waiting for the next catalyst, which either could be the S&B, so we'll see what that looks like, or it's just the reopening of US trading a little bit later on to see whether or not NVIDIA keeps climbing higher, whether the sort of equity market glass half full approach is the right way to go. Talking of that kind of glass half full optimism that equity investors instinctively seem to have. We spoke to Stephen Orth, the CIO of Federated Hermes, on what is happening in Europe and the optimism he has broadly about the equity markets.
Can't help myself but be optimistic, because against all that, you got a valuation 10 points below the S&P, in a way. So, yeah, I have to be optimistic. And, yeah, I would say the banks here look interesting to us. A lot of the commodities-type companies I mentioned earlier. And there's some great little growth stocks in Europe, too.
Great little growth stocks. Not quite as great as the ones we're seeing over in the United States, but great little growth stocks over here too. It's interesting that he picks out the banks, given the turbulence we've seen surrounding what has been going on in France and the impact on the banking sector that we've seen there. Is everybody as optimistic on Europe? Let's find out. Yogi Diwan, Hassiem Asset Management CEO and founding partner, sitting opposite us now to discuss. You're still overweight Europe, but I read your notes this morning. You're becoming a little bit more constructive when it comes to Europe.
Yeah, no, absolutely. Europe is doing reasonably well. The snap elections were not great news. I don't think it's good news for France. If you look at European equity markets, they're up, 12% year to date. I know that the US is doing better, but once you strip out NVIDIA, looking at the US up 15%, NVIDIA's 5% of that. If you strip out all of the tech names, Europe's actually doing better than the US. Europe has obviously got some problems. Snap elections are likely to lead to a hung parliament. If you get a hung parliament, fiscal spending now becomes a problem. You can't pass a fiscal spending and so on and so on. So as a result, that will impact on earnings. It's earnings that drive share price appreciation.
If I'm a US investor, I'm looking at Europe and going, yeah, you told me it was going to get better. You told me that this was the diversification trade. Now look at what's happening. Why are US investors going to be interested in putting their money to work in Europe? And if they don't, are we going to see this rally really peter out?
Look, the rally in the US is being driven by AI. It's tech-heavy.
Sure.
And the tech-heavy element is now a crowded trade. So what you're starting to see is some diversification, a move out of the US into Europe. Valuations are a lot more reasonable. Forward PEs of 14, not 22. And with NASDAQ, we've got forward PEs at 33. You've got a weaker euro. It's 29% undervalued versus the dollar. That will help exports.
The problem with every time I hear the word diversification, I hear underperformance. And that's the problem.
I think you go right back to basics, Guy, and you just...
If you have a diversified portfolio, you are going to underperform. That's been the lesson of the last few years, isn't it?
If you're a long-term investor, you should have everything in global equities, not in bonds, and you should be riding it over a 10-year period. The S&P 500's done 10 to 15% if you go back over the last 20 years. But that is unusual. That does not mean that's going to continue going forward. And when valuations get very stretched, NASDAQ at 33, the S&P 500 at 23, 24, that's when investors get a bit nervous and then they look to reallocate to value, putting geopolitical risk aside, putting election risk aside. And the other thing to bear in mind is that you've got bond yields up at 5%. This is a good environment over the longer term. This is a carryover cash trade ready for when you can allocate capital to equities with a long-term mindset.
I think what Guy is reminding us of is that his pure play investment of his pension into Nvidia back in 1999 and how he's sitting pretty as a result of that, Yogi. Look, on the political elements around France, you said France is looking a little ugly and a little challenged right now on the politics. Do you buy France at this point? Is it looking like is there a gap here to add? If you're that long-term investor, valuations have dropped, get exposure to France.
No, we wouldn't. Look, France is up 4% year to date. It's lost 4% in the last month because of what's actually going on. And if you do get a hung parliament, if you do get these issues, it will impact on fiscal spending, as I've said. This will impact on earnings, and it's earnings that drive share price appreciation. You can't rely just on valuation in France. You can't rely on a weaker euro in France. That's all old news. The fundamental picture does not look good in France.
The UK. Politics are here, July the 4th. How are we thinking about the UK? We have the BOE today, expenditures, of course, to stand pat on rates. Is the UK, the FTSE 100, with that international exposure, what do you do with UK assets at this point?
So the UK is up 8% year to date. Okay, that's the FTSE 100. Look at the FTSE 250, which is a more realistic picture of what's going on domestically. That's only up 5% year to date. The big issue in the UK, and it's different to France, and it's a subtle difference, is that if Labour win in the way that the polls are suggesting, then you're going to see a massive increase in corporate tax rates. Corporate tax rates impact on earnings, and it's earnings that drive share price appreciation. Again, the only saving grace in the UK is valuations. PEs are around 12. Also, if you take the FTSE 100, 60 to 70% of its revenue stream is US related. So there's a massive leverage to the US market, and the US is doing
Labour
well.
have said they wouldn't raise corporate tax rates.
There's a real good sense from a market perspective that corporate tax rates will go up if Labour actually win, despite what's being said and discussed.
You say that there's nervousness on perhaps both sides of the Atlantic in terms of valuations in particular. Why then, if there's so much anxiety in this market, as you say, is no one hedging their bets? Why is downside protection so cheap?
I think the downside protection is cheap, but I think a lot of investors are just going into the bond market. Yields look like they're going to stay higher for longer. You've got very high rates at the moment. You've got fiscal spending plans which usually kick in with an election year, which again leads to high yields with bond issuance. We'll see that with France today. The hedge is to go out and buy fixed income. And if you can pick up fixed income at around 5%, it's a carryover cash trade. It's not a diversification trade. It's not an insurance trade. Insurance is 10 years. Diversification, duration's around 5 years. This is just carryover cash. It looks attractive.
So it might be 5%. I can understand and appreciate that in terms of history. It's very lucrative. But I'd also argue that there is a lot of, I don't want to call it greed, but desire for even more yield given the environment that we've come out from. And people aren't looking for just a single-digit gain, but even looking at double-digit gains. It's creating appetite for private capital, for more EM, for more political risk, and really clipping the yield. Why is 5% enough right now?
It's your sleep easy money. Everyone's got Nvidia in mind, and Nvidia's done, 200% over the last 12 months. It's insane. Will it continue? Arguably not. Valuations look very, very stretched. I think investors are very keen to just clip 5% when valuations look stretched. There's a lot of geopolitical risk in the marketplace. The geopolitics is very different to the war risk, which the markets have pretty much ignored. And at the moment, if you can clip 5, even 6% in investment-grade credit, investors are happy with that with their sleep easy money.
What do you own Nvidia? Should you own Nvidia?
We own
if you owned Nvidia, would you sell it?
gosh, I would be looking to sell or at least trim positions if we owned NVIDIA as a direct stock. Likewise with Apple and Microsoft, I think that the AI narrative is definitely a very crowded trade and very stretched in terms of valuation, arguably in a bubble. We do own it indirectly because of the passive exposure we have to NASDAQ. And we're very happy that we've got that, but it cannot continue.
Call. That's a brave call, selling NVIDIA, selling Apple right now. But you think it's looking long in the teeth?
Definitely.
Where do you allocate that cash then?
That cash can be allocated to Europe. On the reason, based on the reasons that we've been talking about, and you've already seen that trade actually take place. Remember, if you strip out all the tech names, Europe's doing better than the US just on the value play.
That's a big if, though. That if's still there's a lot of weight on that if.
There is a lot of weight on that if, and look, we've still got tech exposure, and we are still at market weighting on tech exposure. We would trim positions almost certainly because markets are looking very frothy in the tech space, and investors seem to agree with that at the moment from what we're seeing.
What is fair value for NVIDIA then?
Oh, gosh, who knows? Who knows?
But it's not right now.
Yeah, well, it's hard to say. I mean, look, as long as the earnings numbers continue to deliver, then investors will look to own it. It's whether the trade is crowded or whether it's at fair value. That's the discussion. That's the debate.
Yeah.
Yogi, great to see you. Thanks for stopping by to see us. Yogi Diwan. He'd be selling NVIDIA. Hassiam Asset Management CEO and founding partner. Thank you very much indeed. Let's talk about what's happening in Europe. These are the details of the biggest stocks that we watch out for on a daily basis. Danone is down today. It's affecting Nestle, as you can see on the right-hand side of the screen. Tech is coming back a little bit, which is interesting as well, because that was the sector that was sold yesterday. But ASML bouncing back up 1% today. Novo Nordisk flat. LVMH fairly flat as well. We continue to watch what's happening with French stocks. Let's figure out what else is happening. Joe Easton, over to you.
So we're going to start with a big dropper in the UK, and it is YouGov, the pollster company that everyone will be looking at ahead of the UK election. The election is set to boost demand there, but the other big business in that company is General Market Research for companies, and they're cutting their guidance today, and that stock absolutely slammed down the most since 2009 for YouGov in the UK, a big decliner on the London market. CMC Markets gaining once again, the best performing stock on the FTSE 350. Retail traded booming once more post-pandemic, another 7% gain for that one. We mentioned DS Smith, weak results, but it is a takeover situation, so not too much movement in that one. Down the bottom here, you have been discussing Danone doing a capital markets outlook day today. Some of the sales guidance potentially not as strong as people expected over for the Activa and also Evian water makers. So that one is among the large caps declining today. Another big decline I want to bring you is BIC. Now, everyone will know this as the giant maker of biro pens, and it is getting absolutely slammed in Belgium today, down 14%. But it's not pens that are weakening, it's cigarette lighters, according to the company. That's what they're saying in the statement. The US lighter market is declining. Good news for potentially health, but not so good if you're making lighters, and that one is down 14%, a big decliner this morning. In terms of your deals, lots going on. There is a Bloomberg scoop over in the pharmaceutical space. This is Evertech in Germany, hiring advisors to fend off some takeover interest, some hostile takeover interest, according to our deals team, and that one up 10%. Over in Germany, Tate & Lyle getting hit, spending $1.8 billion on a US ingredients company, according to an RNS that broke a few moments ago, down 6.8% this morning. Investors potentially not liking the payout on that one. And you touched upon earlier NatWest and Sainsbury's. NatWest picking up Sainsbury's banking division. It is pretty small for them, but we are seeing a little gain in Sainsbury's this morning, up 2%. NatWest steady ahead of the BOE later today. Over in autos, a quick look at that sector. We've got some new car registration data out today. It's looking pretty weak, mostly in EVs. We are seeing declines, double-digit declines in some of those registrations, but we're holding pretty steady. Potentially, that is already priced in. Mercedes, Volkswagen and Renault ticking very slightly low, but not too much action in that one. Then on your morning calls, going to bring you ASMI. Now, your last guest did have quite a contrarian call over on AI, saying that's potentially a bubble. But AI is the driver for this stock, ASMI. It is the chip machinery company, not ASML. It's the other one, and it's up 4.3% as Morgan Stanley goes overweight. And then finally, over in airlines, Lufthansa, one of the worst performers today. Stiefel cutting that one. They go to hold from buy. €7 price targets, potentially not too much downside, but it is falling 3% as the long-haul travel market does decline in terms of pricing. That's the worry there. Stifel cuffed Lufthansa today, and it's down 3% over in Germany.
OK, Joe Easton from our equities team on the Stocks on the Move this Thursday morning. Joe, thank you. Coming up, French Business will get a chance to grill key figures ahead of the election, the parliamentary vote, of course, at today's Medef conference. We're showing you live pictures outside Paris. We're going to be live from that event next. The kind of questions that may be posed to France's political leaders. This is Bloomberg. Welcome back. This is Markets Today. We are 19 minutes into the European trading day. European stocks taking a bit of a move higher, up 0.4% across the European benchmark, with the likes of ASM International over in the Netherlands up 5%, one of the leading gainers. At the bottom of the list, the likes of Tate & Lyle and Danone currently down 2.6% on an update in terms of its future plans. Let's cross over now to Paris. We are live at Medef, the biggest employers' organisation in France, of course, at a moment when we expect businesses to want some pretty clear answers. Whether they'll get them or not from political leaders on the left, the right and, of course, in the centre out of France is going to be crucial. Caroline Connat is on the ground for us. The head of France's business lobby has criticised the programmes of both the far-right and the leftist alliance ahead of the country's snap parliamentary elections. Patrick Martin of Medef says both the National Rally and the New Popular Front are a danger to the economy. Caroline Connat, then, outside the Medef event, what exactly is being said, and will it chime with France's political leaders? Will it have an impact, Caroline?
Of course, this comes at a very crucial moment, just 10 days before these snap elections in France. The party leaders of all parties are going to be heard by the business lobby Medef. Edouard Philippe, former Prime Minister, is speaking right now on stage. And as you were mentioning, Patrick Martin, the head of the Medef, has already said in an interview before this conference that both extremes represent a danger for the economy. He actually said that Marine Le Pen's program would mean that France would be totally cut off from the EU, and that she's actually quite different from Giorgia Meloni in Italy, because he argues that Meloni is much less anti-European than Marine Le Pen. For Patrick Martin, the head of the Medef, the costliest program is actually the one from the Union of the Left. We actually just saw behind us coming in the leader of the New Popular Front, who's going to be next, just after Edouard Philippe, being grilled here at Medef in Paris. For Patrick Martin, you know, what he was saying is that whether it's Marine Le Pen or whether it's the Union of the Left taking power on July 7, it's as if France was a small island cut off from the world.
Yeah, which it clearly isn't. Caroline, interesting to see these leaders turning up, waiting to be grilled. Interesting that French business does get to maybe exercise its voice. The Institut Montaigne unveiling its assessment of the costs of some of the programmes that have been vaguely outlined by some of these political groupings this morning. What is that information telling us about the extremes of some of the spending plans that are being talked about?
You know, the cost of living has been the top campaign pledge for all the parties really here. But of course, having measures to improve the way of life and the way people have access to essential products costs a lot. For example, this measure from the National Rally to cut sales taxes on energy, that's 12 billion euros, another 27 billion euros for re-indexing pensions on inflation. But actually, the costliest program would be the Union of the Left, also according to Institut Montaigne, with this measure of blocking prices on essential products costing as much as 29 billion euros. But you know, the Macron's camp is also presenting, of course, some measures in order to try and convince part of the electorate, of course, and this program also has a cost. They unveiled, for example, one measure which is reducing the stamp duty for first-time home buyers to improve the real estate market in France. And that measure, for example, will cost 12 billion euros as well for public finances. So all these very costly measures, and we're just one day after France was put on a list for excessive deficit by the EU.
All right, Bloomberg's Caroline Conan there in Paris watching that Medef coverage for us live. We thank you so much for bringing that to us. Speaking of live, we are about 6 minutes away from the SNB decision. We are going to keep an eye on that for you and bring you the breaking headlines and the market moves that follow. If you've been a watcher of this program for the last, I want to say 90 minutes or so, you'll know I'm obsessed with the FX story. And there's two charts that I think you need to know before we get into the eco conversation. That's simply what positioning looks like. You're seeing strength in the Swissy this morning against the euro, the pound, the dollar as well. There's a conversation here about positioning from non-commercial players. They're all bearish. But then you look at the hedging, you look at the options market, the risk reversals. So your bearish positioning shown on that screen there. And you can really see it's being built out in just the last couple of months in a really big way. This is a funding currency as well. So remember, there are ramifications for the rest of G10. Look at the options market on the other hand, which we'll get that chart for you in a moment, talking about risk reversals. And you see the hedging on the upside is also at its highest since October of 2022 against the euro, by the way. So these are 1 week risk reversals that will pull up for you. And that's going to be a big conversation. There are two different stories. This market could go either way. If they do nothing, has nothing already been priced, I guess is the question. Does the Swiss franc continue to appreciate from here? Or is that, to your point, maybe already to a certain extent in the positioning? I think that's an interesting question. Yeah. If they do cut, do we see a big move lower? I think it's going to be interesting. They want that. That's what Jordan's objective is going to be here.
That's not what they're going to get, according to MUFG, who have said, they put out a note saying that even if they do cut, it's unlikely to trigger a sharp reversal of Swiss franc strength. And it ties back to the France story. That's the problem, isn't it? And that's the hedging that's showing up on your screen right now. Again, going all the way back, this is how strong that move is. And you mentioned it as well. So much of this is the 1 month move is against the euro. It's really a function of the euro. It's not a function of the Swiss franc just yet. And that, again, it's the euro's ripple effect that's moving. Do they have to lean in on it, though? Has French politics effectively forced the SNB's hand? Yeah. And is the three kind of member committee going to decide that it's enough at this point to make a decision to cut rates, a second cut, which would stand in stark contrast to a lot of other people? Is that the strategy then that applies? I mean, this is a debate at the ECB, right? What is the effectiveness or the efficacy of consecutive rate cuts as opposed to cut, hold? And it feels like the fact that the SNB is the guinea pig right now for potentially global. And it's another example of another central bank that arguably is being hemmed in by events outside of its own jurisdiction. It might look at the inflation data domestically at 1.4%, but there's events arguably. And they have a currency problem. They have a carry problem. That's the way the BOJ does. The SNB is always probably impacted by external events. Thomas Jordan is going to be speaking to us a little bit later after the press conference. We'll bring you that, obviously, a little bit later in the morning. Up next, we're going to bring you the decision. This is Bloomberg. Swiss National Bank cut rates. We are down to 1.25%. The expectation was the rates would stay on hold, at least on the screen in front of me, at 1.5. That has not happened. In terms of the commentary around this, let's see what is happening, because we are trying to work out the reasoning behind this. The expectation probably is that this is down to the fact that we have seen the Swiss franc strengthening. So we get an SNB policy cut to 1.25. It's getting into the habit, it's always been in the habit, of delivering surprises.
as the Swiss National Bank says it is prepared to intervene in the currency markets if needed. But the first course of action seems to be a rate cut rather than that intervention. That is perceived as being the best policy tool in order to deliver that. Sees 2024 growth targets of around 1%. This is not exactly rip-roaring growth. 2025, 1.5%. But the takeaway, and you can see it in the market reaction, Tom, is a big move. The euro goes higher. 125, the new rate.
Sizable move in Swissy euro. Swissy currently down 0.4%, close to 0.4% on the back of that move. The big question, as we were debating, is to what extent that will continue, given the political risk out of France. And we know that the strength that we've seen since around mid-May for the Swissy has been a challenge, up about 5% versus the euro. Year to date, though, softer by a little under 2%. But currently, you're seeing weakness coming through for the Swissy. And again, the question is to what extent that will be welcomed by officials, presumably so, over in Switzerland. To what extent that does continue, Kriti.
Let's go straight to someone who called it, who's going to be able to say, I told you so. Eric Nelson joins us here, macro strategy over at Wells Fargo Securities. Look, you called it. The positioning was really interesting because everyone was preparing for weakness here. That's exactly what you got, as they just pointed out. But how much of this actually sticks in the context of the read-through from the French elections, the EU elections, et cetera, and the turmoil that has kind of propped up the Swiss franc thus far?
Yeah, obviously the political risk here very much swamps what's going on with rates, I think, for the Swiss franc. We had a pretty substantial carry trade positioning here in Swiss going into this. So, I think some of that has been unwound, but not maybe all of it. Certainly if we get an unfavorable election result in France in terms of, more EU risk, that's going to lead to Swiss franc strengthening regardless of what's going on with Swiss rates. I think what's really interesting here is it was key about the decision is the SNB, what they really didn't want to do was come in, hold rates steady, have a hawkish reaction, and Swiss franc strengthen even more, and then get an unfavorable election result. They want to have maybe be a little bit dovish. If things go, very well, Swiss franc weakens further, they have that option to buy Swiss, right? So that's really the risk management approach.
And as we're speaking, the SNB saying they're prepared to intervene in currency markets if needed. To your point, what does that look like, though?
Well, it's probably a threat for rather than action for a very long period of time. I mean, it's in the sense that, the Swiss franc is still stronger on a year-over-year basis. That was something they highlighted in March, that annual change. We're not at a point now where the Swiss franc is suddenly so weak that they're probably worried about, runaway inflation. Domestic inflation pressures are pretty well contained, excluding rent and energy. Inflation's running around 1%, which is pretty much right smack in the middle of the S&B's range. So I think they're okay with the Swiss franc where it is, even if it gets a little bit weaker.
Is there more to come? More cuts?
I think they're going to be very cautious here. I unfortunately don't have the inflation forecast in front of me, but I suspect they have kind of given themselves a little bit of an out here, not committing to any further cuts. I think, 3 months from now, if we're looking at, a much stronger Swiss franc, French election risks, have turned into actual concerns around EU fragmentation. That's something that's probably going to lead to more Swiss franc, rather SNB rate cuts. Everything goes okay, though. Swiss franc calms down and maybe starts weakening again. They can probably take a pass on September.
Given the uncertainty around everything, the world is an uncertain place right now. You see an opportunity today with the Swiss franc weakening. Do you buy that? Is that an opportunity to get in? Is there a danger that you see more strength ahead? The tail risks are growing significantly right now.
I think it's, in the short term here, it's probably too early to buy the Swiss franc. I mean, you want to see what happens in the French election results, right? I mean, if everything goes relatively well, we've just had an SNB rate cut. We know what their reaction function looks like. The carry is still good in the Swiss franc and selling it. So I think it's too early to fade this move. But I think it's going to consolidate here until we have a better sense of what these election results look like.
When do they reach for that additional tool, then? What would trigger that move to FX intervention for the SNB?
I think you would have to see a persistent and runaway strengthening, or rather weakening of the Swiss franc, but also some signs that imported inflation pressures are coming back. Right, so it's not just what's happening with the currency. We need to see it feed through to actual inflation pressures. And we haven't seen that yet, even with a weakening the Swiss franc we've had year to date.
With the ECB role as well, and the lack of clarity in terms of where the ECB goes next, how is that likely to factor into future decisions for the SNB?
Well, this is why I think they're going to be relatively cautious. I mean, the ECB obviously cut at their June meeting, but have been pretty guarded around further cuts. Right, so in that sense, I think the SNB wants to keep all of its options on the table. Like I said, Swiss franc, if it's weaker in 3 months, the ECB is not cutting. They probably are not in any rush to cut much further here. So they want to keep kind of things as vague as possible for now.
What does that then do in terms of appetite for the Swiss franc as a funding currency? Does that increase it? We kind of went through this exercise with the yen and the BOJ, and they say the similar things. We'll intervene if necessary. The same kind of jawboning you see with the SNB. But in terms of appetite, at a time when we're still looking at that carry trade very much playing a role in portfolios, what does it do?
Well, I think the SNB intervening and the BOJ intervening are very different animals.
Of course.
Right? SNB has far more firepower and far more sustained impact on the FX market. I mean, look no further than the FX move in 2023. The Swiss franc was very strong, and it really had no business being so strong were it not for the SNB. So I think the BOJ, in contrast, they intervene. Everyone's pretty happy to buy the dip in that in dollar yen, right? So I think it's very different. And ultimately, in terms of the franc's sort of appeal as a funding currency in the near term, I think I'm much more focused, frankly, on the French election risk than I am on the SNB.
So I look. Okay, let's game this out. Say we do see an outcome in the French election that causes concern. What is you get a big move in the euro, you get serious concern. How does the Swiss National Bank respond? What is the next? Do they wait for the next meeting before they deliver something else? Could we see an intra-meeting decision to take further action if we see further strengthening? Could they could they intervene? How aggressively would they be intervening? I'm wondering if the tail risk comes to the fore, what Jordan and co are going to do.
Yeah, I think I'd say to have the kind of reaction that would elicit a shift from the SNB from buying Swiss to selling Swiss, you need to see, number one, a very unfavorable French election result for EU stability, fragmentation risk. Large majority for either the far left or the far right, and immediate plans to try and, go toe-to-toe with the EU. In that scenario, let's say a Swiss franc has to strengthen 3-4% in a very short period of time. Maybe the SNB starts to talk about intervention in the opposite direction. Absent that, I think they probably see how the reaction plays out. I think reality is probably post-election, we're not going to have a great sense of exactly how things play out. Maybe sort of a hung parliament. So Swiss franc probably consolidates, maybe gets a little bit stronger. Not enough to change the SNB stance immediately.
Swiss markets, equities up about 0.5%, about 0.5%, a little above what we're seeing across the broader European equity market. In terms of the stock story and the earnings story for Swiss corporates with that international exposure, is this material?
Well, I think what's interesting is looking at the real trade numbers in Switzerland, right? I mean, exports have actually, done relatively well, even despite the real strengthening of the Swiss franc over the past 1 to 2 years. So I think, it's a very different environment than it was last year. Certainly global trade picking up a little bit has helped. But I think the currency has not proved to be a huge hurdle to kind of globally oriented businesses in Switzerland, especially given the global manufacturing recovery.
Is there a haven story here we need to pay attention to? Let's look past the turmoil from the French elections, past the turmoil of what's going on with the SNB as well. 6 months down the road, we're having this conversation in December of this year. What does the Swiss franc look like relative to the dollar? And I'm going to throw in the yen in there as well. Is it still the haven?
Yeah, I mean, it's much more of I'd say a European political haven and also a geopolitical haven in terms of, we look at the reaction to some of the tensions in the Middle East over the past few months. Swiss franc has been very sensitive to those developments, right? Yeah. So that's, I think, where it comes into play. If it's a classic weaker global growth broadly, big sell-off and risk, I think dollar probably prevails. But Swiss franc is still up there in terms of the league table of haven currencies.
Okay, Eric Nelson, thank you very much indeed with the reaction, the surefire reaction, as I should say, to what's happening with the SNB and that decision, of course, to cut by 25 basis points. From Wells Fargo Securities, macro strategist at Wells Fargo, of course. We're going to be speaking with the SNB President, Thomas Jordan, after that rate decision, so stay tuned for that. It'll be one of his last interviews, of course, before he steps down from that role. Meanwhile, the Bank of England, of course, expect to keep rates steady later today with the impending UK election making a move more difficult. The latest reading of services inflation coming in higher than expected, even as CPI fell to 2% in the year to May on a headline basis. Let's get more now from Bloomberg's Lizzie Burton, who's outside the BOE. Lizzie, what are markets going to be watching out for then?
Well, Tom, I can't promise you any of the excitement you've just had from the SNB. The Bank of England decision today expected to be kind of a non-event. I might as well go home. But look, the detail is what's going to matter today. It's one for the nerds. Kriti Gupta, I'm looking at you. I'm going to be combing through the decision guidance that comes out alongside the decision. Is there a sign that they're comfortable with the recent economic data? Yes, you've got headline inflation back at the Bank of England's 2% target, but services inflation yesterday came in unexpectedly hot. So off the back of that, you had a market reaction that was traders paring their bets on an August rate cut, gilt yields rising, the pound rising as well. So I'm interested whether the Monetary Policy Committee is as unnerved by that number when it's backward looking and you've already seen services inflation peaking. Ultimately, it's on the way down. The other detail that I'm going to be watching out for is the vote split. Last time it was 7-2. If it's any more dovish, that could also suggest that August is a live meeting. But as you say, look, we're not expecting a rate change today. We're also not getting a press conference or updated forecasts. The Bank of England really would like to stay out of it at this meeting because of the election. We've had no Monetary Policy Committee speeches since that election was called. But frankly, it's quite odd that you've got inflation at 2% and interest rates at 5.25%. And if they don't cut this summer, maybe they'll miss the chance to do it if you see inflation rising again before the end of the year.
Keeping an eye on the vote split, the governor's always told me they do definitely use that as a communication tool. Lizzie Burton outside the Bank of England. Thank you very much indeed. What are we going to do next? Norway ramping up its defence spending. It's reassessing, of course, the threat from Russia. We're going to speak to the country's defence secretary. That's the deputy defence minister, effectively. That interview is going to be next. This is Bloomberg.
After the Russian aggressive war in Ukraine, we see that there has been a wake-up call, I would say, in Europe, in the world, that we need the defense. The investors are eager to talk with us. You see a shift from certain funds, actually. As I mentioned, there has been, I would say, before the war, there was special funds that's saying that, okay, we go into the more sustainable green part, and then went out to defense. We see some of them coming back now.
That was the Kongsberg CEO speaking to Bloomberg's Oliver Crook earlier today as Norway ramps up defence spending. Let's cross back to Ollie, who is on the ground for us at that factory, the new Kongsberg missile plant, and standing by with another great guest. Ollie.
Yeah, Tom, as you say, the longest day of the year here in Norway, a big day for Kongsberg and Norway in the defense industry. And behind me, you see the sort of naval strike missile inactive, but behind me also the very active Deputy Defense Minister of Norway, Anne-Marie Unerud, who joins me now to discuss this opening of the factory and Norway's defense situation more broadly. So I'd like to start, if we may, just sort of putting into context the importance of this facility, particularly in the context of Norway's defensive plans.
So for 2.5 years now, Norway, together with other allied nations, have donated substantially to Ukraine in order to support them fighting up Russian aggression. And there is a need for us to replenish our stocks. At the same time, we need to be able to continue to support Ukraine and build our own armed forces. And we have very recently, just last week, adopted a new 12-year plan for the build-up of our armed forces. It is a very ambitious plan, and in order for that plan to be successful, we need industry capacity that matches the new level.
And do you think that industry capacity does match that level? Because as you say, it's not just supporting Ukraine, it's building up the own sort of NATO alliance to the tune of probably trillions of dollars for the years to come.
There is a realization in the entire NATO community right now that our industrial capacity in the Western alliance does not match the demand right now. Therefore, there is a great need to expand production capacity in the defense industry in the entire alliance.
And how much does the sort of future of that defense agreement, NATO, and the potential election of Donald Trump in the United States come into your figuring? Does it change how much money you think needs to be spent on defense here? Norway's
plan is based on the deteriorating security situation in Europe, resulting from Russia's aggression in Ukraine. And we realize that Norway needs to strengthen our armed forces. And we also realize that Europe needs to take a greater responsibility for our own security. And this defense plan does exactly that.
And then in terms of sort of the conversations that you have about sort of Norwegian defense and the meetings that you have, obviously one of the main concerns is the oil and gas fields that are quite near to Russia. Are those coming into under pressure? Are you seeing sort of drone interference? Are you concerned there?
Well, the deteriorating security situation affects all of Norway and all of our security matters. So that is one aspect of it, but it is not the most important aspect of it.
And in terms of one of the sort of, I would say, accidental beneficiaries of the war in Ukraine has been Norway, insofar as you guys are sort of the main provider now of oil and gas to Europe. Do you think that there's a greater obligation that Norway has to actually do even more in terms of securing European collective defense?
Norway has a moral obligation to support Ukraine, as has every other European nation, and we recognize that obligation. And in January last year, Norway adopted a 5-year, $7 billion fund in support of Ukraine that has unanimous support in Parliament, which at that time was a very large support package.
And then, you know, Russia's also gone into sort of full-blown war economy. Do you think that Europe needs to take some lessons out of that book and needs to adjust not just in Norway, but more broadly within Europe?
As I said earlier, there is a realization in the NATO community that we need to expand our industrial base in order to be able to meet the current security situation and the needs in the alliance. And Norway has taken its part, among other things, by doing this, expanding our missile production. And I think it is important that other European countries expand their production as well.
And this also just trying to understand kind of strategically the areas that you're trying to strengthen within the military. Where are you allocating those resources? Is it sort of more naval, or where are you looking at the threats?
We are making substantial investments in our maritime forces. We are renewing our entire surface fleet, as well as investing in more submarines. We are also making very substantial investments in air defense. We are doubling the number of NASAMS batteries and also investing in long-range air defense systems. And we are also expanding our army and other land forces substantially.
Anne-Marie Onere, thank you so much, the Defense Secretary, the deputy here in Norway, at the opening of the Kongsberg factory, where they build these sort of joint strike missiles and naval strike missiles here in Norway.
All right, Bloomberg's Oliver Crook there, as he was really talking about the ramp up that you're seeing in the defense sector as a response to the geopolitical risk. And that's the conversation we want to continue from a different perspective, from the insurance business, perhaps, as insurers warning business to build resilience with the year of unpredictable elections, rising geopolitical risk, and, of course, more frequent climate events. We've got the perfect guest to dive into it as well. Joining us now right here on set, Sierra Signorelli, CEO of Commercial Insurance over at Zurich Insurance. A pleasure to have you on the program. Thank you so much for coming in studio. Walk us through what you're seeing from your perspective. There's these rising risks. There's a lot of real fear, not just in terms of the investor community, but especially when it comes to things like that geopolitical risk that Ollie was just talking about. Where do you stand on that?
Yeah, so I mean, it's an interesting time. There's no shortage of risk. It's not a benign risk environment. But there's an opportunity with this. I mean, from an insurance perspective, we see so many different risks over time. And when we see over 5 million claims a year. We pay over $22 billion in losses every year. And I think the opportunity that we have is to share some of our experiences, especially as we see risks evolving, and to help companies become more resilient. There's no reason that we need to learn lessons twice, 3 times, or 100 times across every company that takes on something new. We see this with the transition as an example. I mean, even something as simple as installing solar panels. We've seen years ago when companies started putting them on the roofs of buildings that you would see that If you install them the wrong way, you can set a building on fire. And if they're not properly angled, the wind can do damage to the structure of the building. And so taking those learnings and sharing those with our customers around the world so that we don't make those same mistakes twice. And that's important from a risk perspective, even for something as small as solar panels, because it allows us to reduce the cost of risk, which is important.
In terms of the risks you're seeing, how many more high-impact events are we seeing? Is the science telling us that there is going to be more, that it's going to get worse from here? What is the message to your clients in terms of the kind of the growing, burgeoning risk that they face from the climate story?
Yeah, that's a great question. And a lot of people are talking about we're going to have an increased hurricane season this year, which is historically the way we looked at it every year. The fall would come and we would think about, is it going to be a hurricane season or not? The challenge we see now is we see storm events, weather events all year long. So if you think about last year, I mean, it was one of for secondary perils, which is what we call events outside the big hurricanes. It was the most impactful year on record. And then this year, we're already seeing, you see, before we head into the hurricane season, we're already seeing in Germany, we've seen floods. In Dubai, we've seen floods. In Brazil, we've seen floods. We saw gargantuan hail in the U.S. So you're seeing more frequent, different weather events all through the year before we even get to hurricane season. So the environment has changed significantly, which is why it's really important for us to focus on building resilience with
you're painting a picture of something like Dante's Inferno. So the demand there is there, clearly, given all the challenges. What does that mean for premiums? Premiums have been going up. Do you expect that trend to continue?
So premiums have been going up because we've been seeing more and more events that are happening and in a broader geographic area than we have historically seen. So one of the things that we're focused on, and we launched a couple of years ago, services associated with using our risk engineers and other experts that we have to help our customers understand their exposure to climate. And to do that, it's understand what are their flood exposures and how do they prevent, as an example, flooding at their facility. And so this allows them to take simple, kind of pragmatic approaches to removing things from basements that are critical materials or expensive equipment, or maybe even creating diversion channels around their facilities so the water runs off. Okay. So taking some simple steps and then working with them, even if they're building a new location, to think about how do you construct something in a way that'll be more resilient in the long term.
Sierra, thank you very much indeed for joining us on set. Sierra Signorelli, the CEO of Commercial Insurance at Zurich Insurance, on how the industry and clients are adapting to these climate crisis challenges. Just checking on the markets, you're seeing modest gains of 0.4% across the European Stock 600. Across the sectors, construction at the top of the list, gains of a little shy of 1%. Real estate also up there. On the downside, food and beverage and personal care. Futures in the US pointing higher.
Big story this morning has been the SNB.
Yep.
We've seen a rate cut, which is a surprise, 25 bips coming off there, so we're down to 1.25. We're waiting for the Norge Bank. Got a few other events coming up a little bit later on in the day as well. We're going to wait for that Thomas Jordan press conference. A few things coming out of the States that are worth paying attention to. I think we get ECB accounts today as well. So there's plenty on the agenda, but the story is the SNB has cut rates.
The story is the SNB has cut rates. The Swiss franc continue to be weaker across the dollar, euro, pound as well. You are, however, we're keeping an eye on the NOK. The presser for the SNB coming up in just a few seconds, as is that Norges Bank decision. It does it for markets today. The Pulse is up next. This is Bloomberg.